Hello, friends, and welcome to Investing Basics. My name is Andrew Olson, and I'm the author of Taking Jesus to Wall Street, a stock trading guide for Christians. And I wanted to give you an opportunity to gain some of those insights that I wrote about in the book, but do it for free through this video series. I had seen so many other people offering little courses on stock trading through Facebook or through the web, and I just wasn't very happy with what I saw. A lot of people had pretty, in my opinion, bad advice for the average person, and they were charging a lot of money for it. So I thought, I can do better, I think, and let's put some of those insights from the book out there in the public so that you can get them for free. So we're going to go through a little bunch of lectures here. There's going to be just short, try to do it in 30 minutes, and I want to get you basically back in the driver's seat of your own investment choices so that you can be a smart investor who has got principles underneath their decisions and really a good biblical wisdom as the foundation for why you make the decisions that you make with investments. So with that, let's begin. All right, well, in this first lesson, we have a lot planned. I want to get to a brief history of stock trading, tell you a little bit about Robinhood and what that tool is about, and how to transfer money to and from that brokerage, how to set up a watch list of different companies that you can keep track of, how to get into cryptocurrency if that's your thing, and how to chart different things with Yahoo Finance, as well as how to compare different options there as well. So that's what's ahead of us. I'm really excited to share with you. And it was on May 17th, 1792, when 24 different stockbrokers formed the U.S. Stock Exchange in New York City. And what that was a physical location where trading was happening. And the trading was with stock certificates. A stock certificate was a piece of paper that represented either a debt or a fractional ownership in a company. Let's say a company has 100 shares out there, and if you have one share, that means you own 1% of the company. Okay? So this was a way to sell pieces of companies and make them publicly owned, which was a very exciting thing at the time. And it worked fairly well, except problems came along. What do we do about counterfeit certificates? What do we do about the safety of those certificates? And what if I can't get to the actual stock exchange in downtown New York? And so there needed trustees in the picture, people who could keep those safe. Often it was banks who would keep those stock shares in safety deposit boxes for people. But even better than that was to have what was called a broker, somebody you were working with who would keep those shares safe, who could go to the stock exchange on your behalf and buy or sell certificates. The stockbroker was the king of Wall Street for a very long time. You'd call them on the phone or whatnot, and send them a telegram and tell them to buy or sell a stock share. Well, over time, those jobs became very digital, and it wasn't about being present at the stock exchange, but it was actually about using the computer and leveraging the computer to make those trades happen. And so over time, as computers took a more dominant role in the stock trading process, the cost of the broker went down, and a broker was able to do a lot more work for a lot less. And that had implications for different stock brokerages. There was a lot of them out there, and even in just recent history, Fidelity, Charles Schwab, Scottrade, Ameritrade, ShareBuilder, among so many others. And they all had something in common. It was $5 a trade. Even when I started trading and investing, it was $5 a trade. And it's an okay amount of money. It's fair. I mean, they're doing a work, they're providing a service, but in the back of my mind, I always thought this was a little bit expensive. And actually, it adds up. You think it's just $5, but if you do quite a bit of trading, that really can add up. Well, along came another company called Robinhood in our lifetime, recent history, and they came along and said, computers have so changed the world that we think we can make zero commission trading a possibility. And all these brokerages, they said, yeah, right, we don't believe you. It's never going to work. The commission trading has been the way ever since the beginning. but Robinhood said, we think we can make it happen. I love how this little picture here shows Dunder Mifflin. Great TV show. But anyway, it's a mobile application and a web application that does just that. It's a brokerage, but it allows for free trading. So that's a very exciting thing. And we're going to get into how they do that. How do they pull that off? But wonderful new tool, Robinhood. And we're actually going to log into my Robinhood account to give it a try. I'm not going to just talk. I'm going to show you what's going on. Now, this Robinhood account isn't my actual brokerage. I have a different brokerage with someone else, but I use Robinhood for most of my cryptocurrency, so I'm okay showing you what's in this account. All right, so when you log into Robinhood, I'm just going to give you a little overview of what you see. First of all, you have a chart here in the center, and that chart represents your total growth over history, okay? So it tells you, when you were up or down and your total profit. So my total profit on this account since inception was $2,500. So it is a helpful tool. You'll see these graphs a lot of times. You can change the window from usually 1 day to a year to 5 years. And that's helpful so that you can see what you're looking at. Also here in Robinhood, that one of the other things you see right away is on the right hand side there is a watch list. We're going to get into how to set up a good watch list here in a little bit. But those are different companies that you add yourself that you want to keep track of. And so that's what that is on the right. You customize that completely yourself. Okay, so now we've seen the platform a little bit. Let's get into how to transfer money to a brokerage, or what is a brokerage actually doing with your money? Well, so a bank account holds your bank dollars, right? Your money, your physical money or your cash. A brokerage also does that. It's like a bank account in a way because it holds your money. You can transfer money to a brokerage and it stays cash, or you can transfer that cash back into the bank. All right, so it's similar to a bank. I actually have a debit card as well that is linked to my brokerage, and if ever I want to spend money that's sitting in my brokerage account, I can just spend it with my debit card. Okay, but the thing that's different about brokerages is that they also hold shares. So you can use the money in the brokerage account to buy shares of different companies or sell those shares. So first, let's talk about how to transfer money. Over here on the right, you see this account tab. It's very similar in the mobile app as well. There's an account tab, and you click banking. So once you're in the banking tab, you can transfer from your checking account to Robinhood. Maybe I want to transfer $5,000, okay? Or I can transfer back. I can transfer from Robinhood back to my checking account. Say I need the money for something else. I can take money out of my brokerage, put it back into checking. So that's how that works with the transfer feature. There's also other features here such as recurring investments. So if I have cash that's being put into my Robinhood account, then I can have it automatically invest that cash for me. And that's a really powerful feature. We're going to talk about dollar cost averaging probably in another lesson, but there's a really good advantage, a strong advantage of investing at an interval, such as every paycheck you can put a little bit of money away into stocks. And so there are tools within Robinhood for doing that as well. Some people ask, how do they make their money? This all sounds so good. How can they afford to let everybody trade for free? Well, there's two ways they do that. One is through cash. So as I told you, cash sits in the account until it's ready to be used, right? They pay you interest on the cash, but having large amounts of cash does good things for banks. It allows them to leverage that cash to make money. So that's one way they make money. Another way that they make money is through a service called Robinhood Gold. Robinhood Gold is $5 a month for those who really take investment seriously. They want instant deposits, they want margin, and a little bit more information on and research on these companies. So Robinhood Gold is a pretty good option for people who are professional investors or at least serious ones. For me, it didn't really fit my strategy, and I don't really want to pay the $5 a month, so I don't use Robinhood Gold. But anyway, it is there for those who want to use it. Okay. There's also tools such as this portfolio tab where you can get a little bit of an idea of where you're sitting at here. You can you can kind of see the charts and graphs a lot of different ways, and so we're not going to get into that, I don't think, right now. Let's talk about the watch list next. So on the right hand side, you can see there's these various companies, and of course it all looks like symbols and stuff until you get to know them a little more. So don't be intimidated when you start Robinhood. There's going to be a lot of letters and you don't understand what they mean. That's fine. Each company or each index fund has usually a 3-letter to 4 to 5-letter ticker symbol. So up here in the search bar, let's go ahead and put one in. And for the purposes of this demonstration, I want to talk about VTI. So I'm putting in VTI and I'm going to select that. And now it pulls up a different chart. This is the chart for VTI, which stands for the Vanguard Total Stock Market ETF. A very, very good, 2 enthusiastic thumbs up investment opportunity. If you're looking for something as a beginner to get into, VTI is very good because it's an ETF that has every company on the stock market within it. So it's the total stock market index, meaning when you buy one share of VTI, you're getting a small, tiny little bit of every single company on the market. So it's really good, really safe option. You can see the different charts as you're in here with VTI. The market is still open here for a little bit. Let's go ahead and buy a share, shall we? All right, so here we are. Buy VTI I've selected in the thing. It says invest in shares. I'm going to put in 2 shares, okay? So it tells me the price, and I click review, and I click buy. And it's going to go ahead and purchase those shares at the current price. And then it will tell me, okay, this is how much you paid for those shares, okay? So I'm going to click done. Now you'll notice down here below this menu, there's this thing that says, you have this much buying power available, okay? What that means is that's the amount of cash that's sitting in your account still. So I could buy a few more shares of this. Right now, I don't think I will, but for the purposes of this demonstration, that's sufficient. Let's show you how to sell something. So I got this free share here of Catalyst Pharmaceuticals when I referred somebody to join Robinhood. It was a few months ago. I'm just going to sell it. I think I have 1 share. So I'm going to click sell, 1 share, review order, and then I'm going to click sell. And within moments, it's already sold. So now that cash has a holding period. I don't get that money right away. That goes back into my account in a few days. One little thing to note about this when you're getting started is that it's not permitted via our US laws to buy and sell like rapid fire, okay? So you can't buy and sell the same company, they say, in three times in a day. If you do 3 what they call day trades, your account will be locked temporarily, because what they want to make sure is that people aren't making mistakes. So if you want to get past that day trade requirement and you want to do a lot of trading, you have to have at least $25,000 in your account. I really highly recommend not getting into day trading. I talk about that more in my book about good investment strategies. It takes a lot of discipline in stock trading, especially in learning when not to sell. And so I really strongly recommend just buying and accumulating these index funds as you go, okay? So that's the watch list. Let's add a company to our watch list. All right, let's add Walmart. I really like Walmart. I think they've got a great number of stores. They've got a great looking chart. I think they're set up for some pretty good growth. So what I'm going to do is I'm going to click add to list. And I've got a new list here called 2020 list. I'm just going to add that to that list. When I go back here and I open up 2020 list, there it is. It's the 3rd one there, Walmart. So that's how you add something to your list. It's really easy to click on something. I'm going to talk about this too, QQQ. It's one of the best for new beginning stock traders as well. And I'm going to tell you why in just a little bit. All right, next let's talk about cryptocurrencies. They're getting pretty exciting. Robinhood also supports cryptocurrency trading, and it works a lot like stocks. Cryptocurrencies like Bitcoin, you can see the graph here. You can see where it's been, where it's going, and then if you want to buy Bitcoin, you come over here to the thing and you say how much you want in dollars. So I might want $500 of Bitcoin. Let's just put through an order right now for $200 of Bitcoin. All right, so I'm going to click review, and I'm going to click submit, and then it's going to go pending, and then it will purchase it. So it's already purchased that Bitcoin, and now I have it. If I want to sell Bitcoin, it works the same way, but in reverse. I can sell it right here too. And Bitcoin is very interesting. It's some people are saying it's going to be a hedge against inflation. There's all these currencies that are up and down right now, and Bitcoin, it's not attached to a global currency. So in a way, it's a little bit safe against inflation, especially some are saying in this election year. Back in 2017, when it was up to $20,000, some people thought that was crazy, but here we are. It's at $13,000 and a half, and it's on its way up. So if you want to get involved in some cryptocurrencies, there's a way to do that within this platform. You can also get into Litecoin, Ethereum, and a few others as well. I would just be cautious to not overextend yourself in cryptocurrencies unless you're feeling really particularly confident about them. I really highly recommend these ETFs that I want to tell you a little bit about now. So next, I want to talk to you about how to chart. Charting is very important, especially comparing your different options that you have, because let's say one company is going to perform, you put in $1 and it's going to give you back $2 over 5 years, and another company you put in $1, it's going to give you back 10 cents over 5 years. Okay, so there's a differences in performance among companies, and you want to be able to compare them. Okay, so open up finance.yahoo.com, and you get this whole bunch of tools. Let's open up a comparison here of VTI. So click VTI in the search bar, and then it will open this up. It'll show you this nice little graph here. Okay, then you want to go full screen. Now this is really only possible on a desktop or a laptop, so have one of those out, and then open up this graph. Now this is great because you can see how this stock has done over the last 5 years. You can kind of get an idea of where it's going. You can draw cool lines on here, like a trend line if you want to make a guess at an average or something. But the tool I really want to point out to you in this chart is called comparison. It's up here on the top. So I have VTI open. I want to compare that with, let's compare it with a common retirement type savings, a Vanguard 2035 retirement savings account. So this is a very common savings option for workplaces will often choose like a Vanguard retirement thing. But you want to audit that. Don't just take their word for it that they're doing good with your money. Check in on it and check and see. In this case, I can see that the red line is underperforming the blue line. In other words, this retirement savings account is actually not doing as good as the VTI. Let's add one more in, QQQ. Excuse me. Now QQQ is doing even better than VTI. Over sort of the 7-year term here, we've got a 300% increase. Let's zoom in a bit, get just a 1 year. All right, well, here's like a 2 year. And there we go, that's about a year. So over about a year, QQQ has performed 56% return on investment, whereas the retirement account has done 11%. My VTI has done 19%. So QQQ is a really great option. It's called Power Shares, and it's a very more so an aggressive growth type of type of security, but a really good one. Now, the reason I tell you about this is that when I audited my funds in my retirement account for the first time, there were some of these bonds that were just so low. Let me see if I can find a few bonds here. Put them in yellow. Bonds are often not a great way to earn money in your retirement account. And when I audited mine for the first time, I was really sad to see that some things were just grossly underperforming. And so, yeah, I'm not going to be able to pull this up very easily to show you. But, yeah, just audit your own things. And when you want to buy something, compare it with other options that you have. And also know the history behind the companies you invest in. So, like, for example, if I put Apple on here, all right, Apple has just been having a really great few years. I mean, on the chart, it's like off the charts compared to everything else, right? But is Apple facing some headwinds? Are they going to have the same success in the next 10 years that they've had in the past 10 years? Those are some pretty big questions. And when I started investing, I started out by just picking companies that I liked, or picking, you know, the the ones I thought would be the most successful. And if you look at my long-term graph, I had a pretty big nosedive here for a little bit. All right, where I lost, considerable amount of money. I held the shares. There was a big economic downturn with a trade war with China at that time. Um, but I held on to those shares and eventually they rebounded, okay? You have to learn to hang on to what you've got. Most of the time, that's pretty good advice. You really need to have patience to ride out the downturns. There's going to be times where, there's some news item that comes along and the stocks go down, and you have to be able to be disciplined enough to not sell at the down point, but wait for the recovery. And that's something you can learn. I think even in my book, I talk about how to grow in that strength. Um, but we'll talk about dollar cost averaging in another lesson. There's a way that you can set yourself up for success even with that whole when do I buy question. Some people think that maybe if I buy at the right time, I'll have better outcomes than if I buy at the wrong time. And most of the experts on that say that you're much better off by just buying at regular intervals in something very stable. Like instead of a company like Apple or even Walmart, I would choose the VTI. I've got the strength of diversity of 3,000 companies on my side, and if one of those 3,000 go down, I'm still doing okay. Whereas with if I invest in Apple, let's say that they have a phone a few years from now that doesn't work really well. Well, the stock price will go down, and if I've had a lot invested in that, I will lose a considerable amount of money. So the basics here are that you want to invest in ETFs, in index funds like DIA, SPY, QQQ. Get those and compare those for yourself and see which one best suits your strategy. Okay, so that's a little bit. This has been a little bit about how to get into brokerages. There's a lot of different ones out there. Fidelity, Charles Schwab, tons of brokerages. I like Robinhood now because they do the zero commission trading, and yes, other ones have now since started doing that too. But they just have a really clean and easy to learn interface, especially on the mobile and on the computer here. Where I think for a learner or a beginner, I'd highly recommend starting off with Robinhood. Well, that's going to be it for today. I just want to mention this. Our sponsor today is just this book. It's Taking Jesus to Wall Street, a guide to stock trading for Christians. It's only $5 on Amazon, and I'm planning to release a paperback version here this week. I'm going to try to keep that cost as low as possible. I'm going to try to sell it for $10. But if you want to see how I gained some of these underlying principles, especially things like self-control, peace, I outline that in my book, as well as some strategies and specifics for how to take what the Bible says and apply it to stock market. So this has been the first of what I hope to be a few little mini lectures on stock trading, and I hope I'll see you next time. Bye-bye.